Stocks or real estate? Which should you invest in? I'm going to end the debate in this week's episode. Stay tuned. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you joined me here today. A lot of you probably don't know this, but all I talk about real estate, but I also invest in stocks. All this small part of it, but also some Bitcoin. And I can obviously say that I'm more knowledgeable in the real estate space than I am in equities or Bitcoin, but I would say I surprisingly am decently knowledgeable in the equities and Bitcoin space because a lot of my clients who are in the equity space that can't really buy equities because of investment and due to conflict of interest. So I vicariously learn from them, and that's how I've kind of piled kind of a lot of knowledge on that space, right? That, and also my wife deals a lot of this stuff on the side for fun. So I'm going to give you my perspective, again, from coming from a real estate professional and also knowing some stock stuff on which one you should really invest in. So if you like this type of real estate content and you enjoy it, make sure you help spread the knowledge out there and smash that like button and subscribe to this channel. And of course, obviously share the video with people you know who will probably appreciate this content, right? Because every week we talk about real estate content that matters the most to you. And all of this real talk is because we want to be transparent and honest so that by doing this, when you're ready to make your real estate move, whether it's buy your first home, invest in a property, sell a property, you'll be like, oh, is that guy? He knows what he's talking about. And you'll book a call with me using the link right here, right? So the obvious answer you would think coming from a real estate professional would be you should buy real estate. While it is true, but it's not for everyone, right? My actual answer to which one is better is you should invest in which one that you can actually invest in. Because it's about stabilizing your financial future so that you can bypass all this craziness that's happening in the economy right now. And you don't want to be trading time for money because it isn't going to get you ahead. It's probably not going to keep up with what's going on because inflation is going crazy right now. So you have to invest your money. This is something I wish is taught in school. While that is true, and that is kind of a cop-out answer, I want you to stay tuned to the rest of this video so you actually get my real answer. Now, let me give you a little bit of backstory. So if you're young and you're just getting started, you can probably only do stocks, so go with stocks. Real estate requires a large amount of money for like down payment and a lot of other stuff for closing costs, and there's a really large difficulty in terms of learning curve to get started. However, if you have the option between the two, I'm gonna give you my pros and cons before I give you my answer, right? So let's start with real estate first. Pros. It's something that is tangible, meaning you can touch it, you can drive by it, you can see what you bought. Number two, if it's like your own primary residence, like the one you're living in, it's like a forced savings plan because the interest rate's so low that so much of it is going to paying off your house. Number three, it's leveraged, meaning you put 20% of the down payment generally in what you buy, but if the asset is going to appreciate, you're going to get 100% appreciation. So you leverage that 5 times what you bought, right? So 20 times 5 is 100. Number four, you can make the asset, I mean the house, pay for itself despite it being leveraged, which is cash flow positive. Number five, the growth in real estate is exponential. And I always say, if you can survive with the real estate property you have for 5 years, it's very hard to lose money, very hard. 6, despite the media headlines, real estate is actually very stable. Number 7, you get paid in rent, mortgage, and pay down. Mortgage, and appreciation, which is 3 ways you get paid. And number 8, you can set and forget it. And 9, my personal favorite, is you can refinance and take money out without triggering taxes. Now, here are the cons. 1, when poo-poo hits the fan, poo-poo hits the fan. It's very time consuming and money consuming, and it can happen at any point. And I've dealt with a lot of it, but it's not for everyone. Sometimes people just can't handle it and they sell the property. Number 2, leverage can cut both ways. You have to be careful of that, right? So if the market tanks and you're not cash flow positive, you can get financially wrecked in terms of hundreds of thousands of dollars. Look at 2017. Number 3, dealing with tenants and the housing that over the roof and the emotions that come along, all that shenanigans can suck big time. Number 7, real estate is not liquid at all, tons of transaction costs, right? So let's move to stocks. Number 1, super easy to get into. You can just open a brokerage account and practically trade on your phone right now. So easy. Number 2, very, very, very high growth potential. A lot of people try to go for 10 baggers. Number 3, there's a lot of different financial instruments you can invest in. And I'm just doing investment because some of them straight up I think are gambling. Number 4, despite what a lot of people say, you can leverage up with stock. You can borrow and buy with margin, but there's different types of also financial instruments out there, such as insurance hedge or call options, which I'll throw in there as under the kind of leverage kind of scenario, only if done correctly, but be careful. Number 5, when the trading day is over, it's over, unlike real estate. Number 6, super liquid, and number 7, super low transaction costs. However, here are the cons, right? Number one, it's super volatile. Things can swing so quickly, like so quickly, especially in Bitcoin. Number two, you're constantly checking up on it, despite you'll never actually be selling on it, so it doesn't really matter, and it's just really weird. I do it too. Number three, buying and selling triggers tons of taxes unless you're doing your TFSA or RSP. So you have to know what you're doing and see how much room you have, right? But at the end of the day, like I was saying earlier, it doesn't matter what you invest in, so there's no winner. Just invest in something. And the reason why I'm not throwing up kind of like a real estate versus stock return chart, because it's irrelevant. Everyone focuses on the thing that doesn't matter. If you become an expert in something, and this is my non-cop-out answer, okay? If you hone your craft on something, you're gonna be successful. Doesn't matter. Do I beat the average real estate investor's returns? Probably, because I'm good at it. Will I beat most of the other stock traders out there's return? Probably not, because I'm not very good at it. See, there's this thing with Malcolm Gladwell where it says you need 10,000 hours to master something, and it applies here. If you dedicate the time to mastering the investment strategy, whether it's stocks or real estate, and just make money of it, you will master and make more money and get better at it. And I know all the strategies in that field. When you dive deeper into it and get slight edges, that will make you ultimately better. It's like the athletes. The difference between winning and losing could then be a fraction of a millisecond. It's that slight edge that gives you an advantage when you master your craft and you dedicate time into it. True story. So if you're looking for like a get-rich-quick scheme in either strategy and don't master it, you're subject to market swings because you don't know what's going on. You get emotional, you lose money, you're like, oh, it's a scam. It's that simple. Master it. Neither one is better, stock or real estate. The one that is better is the one that you can be the best at and beat everyone else. I've said this before in my tips for a 22-year-old, and you can catch up here in case you missed it. Double down on something. Become a master, whether it's business in something, it's an investment strategy, stocks, real estate. Be so good at it that you reduce the risk of losing money. And once you secured your bag, your bag of cash, then you can diversify. Don't diversify too early. I think it's overrated. As you can probably tell, I'm not a big stocks person. I just understand it, okay? But I do have some diversity because I've made some money with my real estate portfolio. But I don't have much of a professional opinion, nor will I be out there trying to help people with stocks because I'm not a professional, I'm not good at it, right? I haven't put in my hours. But what I am good at is real estate investing. I've definitely put in way more than 10,000 hours. I'd probably say like 25 to 30,000 hours in real estate investing because all I did for the last decade was buy and trade real estate for investors and invest myself. So you bet your bum that I have some expertise on it. So if you want to learn from someone who has that many hours under the belt, you can book a call with me using the link right here. It's www.travisdown.com. Don't call me for stocks. Not going to give an opinion on that. But for real estate, right here. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.